The world's leading logistics firm, DHL Group, says strong industrial demand and a 10% rise in shipment weight helped drive its second quarter earnings well above expectations. The logistics giant also raised its full-year profit guidance. Now, speaking to CNA, CEO Tobias Meyer says that DHL enters the second half with strong momentum, but remains cautious over the Middle East conflict, US tariffs, and tighter European e-commerce rules.
So we roughly have now an outlook for the full year that is double what we had in the first half, which remains, I think, conservative. We have typically a stronger fourth quarter. We have the peak season, the pre-Christmas time, where in our light package business there's a particular strong demand. But we also still have macroeconomic factors, the situation in the Middle East, tariffs in the United States, but also in Europe as it relates to e-commerce. So those are factors that we balance. Overall, really good momentum in the second quarter. So based on what we see on the customer side, we are very optimistic.
The Middle East conflict, though, that's increased fuel, insurance, rerouting costs for yourselves. But it's also tightened air freight capacity and supported your pricing. Quantify for us the net effect of that conflict. Was it ultimately positive or negative for second quarter earnings?
So within the quarter, we had indeed quite big swing factors. If you look at our top line, especially at DHL Express, this being a business that has significant exposure to aviation and thereby the price of fossil fuels, you see an impact on the top line, roughly 10% in that division. So it has a meaningful impact on our customers as well, who have to bear these additional costs. And again, that is one of the factors that makes us cautious as it relates to some of the developments in the second half. But when it comes to the bottom line, we pass on those additional costs, and we have been able to really flex and manage our global networks very well.
Does the war risk premium prevail, though? I mean, we have Gulf air capacity that's recovered substantially, but the network remains vulnerable to renewed escalation. So are your freight rates and surcharges now normalizing, or should customers expect a longer-lasting geopolitical risk premium, especially on the Asia to Europe trade?
So as it relates to fuel, but also those risk surcharges that you managed, we have a strict policy at DHL that we pass through additional cost, but we try to have that really as a cost recovery mechanism. What some of our customers don't recognize when it comes to those risk premiums, that the insurance of aircraft, for instance, is a significant factor. We saw that into Israel now, since that conflict is going on, and that was sometimes higher than the operating cost of the aircraft, those additional insurance costs. So that's why risk premiums are justified. But similar to fuel, it is a cost recovery mechanism. We make our money on the good service, on the base rates, and that's what we want to continue to do.
What about U.S. tariffs, including the recent Section 301 changes? Has that lowered trade or just redirected it, say, from China to Southeast Asia, India, and other markets? What are you seeing with the new trade corridors?
So we indeed continue to see our customers diversifying their global manufacturing footprint. That's also Chinese manufacturers who used to, or started over the last decade, to distribute their products globally, and now are really distributing also their manufacturing footprint to hedge themselves against geopolitical volatility, including tariffs. As relates to the United States, we now have the second quarter, the first quarter that year on year did not have a significant impact from incremental tariffs. Most tariffs coming into place in February, March, and April of last year, of 2025. So now that's cycled out on an annual basis. We have the replacement of the 122, Section 122 tariffs with the 301s, but it largely sustains the same level of tariffs, and that's what customers and also consumers in the United States have gotten used to. So not a significant change from that perspective. However, on the European side, a change in the de minimis regulation for e-commerce that will have some effect in now the third quarter. So that's one of those risk factors that we still weigh when we look at the full year.